All right, we'll open the show with the Ripple. Summary judgment is obviously not the last word in the issue. If Ripple Labs accepts the limited win here, which they won't, they'll still turbo fucked because they've got multi-billions of dollars in institutional sales they're on the book for. Has anyone checked on SEC and Gary Gensler lately? It's Cameron Winklevoss. Right, breaking. US judge rules Ripple XRP is not a security.
How did you figure that out? What Ripple did?
So it's not a security. How's that bad for them?
Well, apparently there's something about how they sold it that is like a security. I don't know. I haven't been on Twitter today really, so. But it's some nuance.
Anyway, how you doing, Alex?
Doing great. Nice to be in Nashville.
Yeah, and finally we do this in person.
Yeah.
Long overdue.
Absolutely.
I think we've hung out a few times. Me and Danny have been to your office.
Yep.
Had some canopies.
Yes.
It's been a long time coming. We really want to talk to you about talk to you about Prime Trust and talk to you about how an exchange like yourselves can do things properly. So when you're building an exchange, so people understand, because it's a really important issue in that I assume most people still don't self-custody. You can tell them again and again self-custody and they won't. And so when they're considering an exchange to use, we were talking about it this morning, there's essentially a trust model or a rug model in that you might be trusting the exchange, but really you're actually trusting somebody else in the background as well. And so there is this rug model or trust model that you have to be aware of. And so Prime Trust was a big issue recently because I think they were a pretty well-respected company publicly. Wry smile.
Well, I mean, depends who you are.
Yeah. Okay. Yeah. Fair.
Yeah.
But I hadn't heard any whispers or any issues with regards to them myself. And so my assumption was they were a trustworthy company, got trust in their name. So can you give some background? So people listening, I'm trying to explain what Prime Trust is / maybe was as a business.
Yeah. So this gets into some specifics on how things work in the United States. So what Prime Trust offered as its core business that was attractive to a lot of firms trying to build consumer crypto apps was Prime Trust was effectively what sort of Evolve Bank is to fintechs for crypto companies. And so what I mean is if you look at famous neobanks in the United States, Chime, Revolut, N26, like these guys, they actually aren't banks themselves. They have this bank behind the scenes that's doing all the regulatory work, and they're building a really sexy app on top of it, right? So you're sort of decoupling concerns. You have the sort of old school company that's checked all the boxes, and then you have this new fast-moving company that outsources sort of handling the money, handling the regulation and compliance to them. They sort of have an agreement, and they're building a wrapper on top of that. Prime Trust was effectively that, but for crypto apps. And basically what that meant was if I wanted to build a crypto wallet and brokerage, all I needed to know how to do was market and build like a web app, right? So what Prime Trust would do is, the way it would work is, so for when I build my app, somebody signs up, I collect all the KYC information that I've been told I need to collect, and then I send it to Prime Trust. And there's an account on the back end at Prime Trust for my user. And actually, I don't touch any money. Any financial transaction is actually, I'm just sort of proxying that through to Prime Trust. So Prime Trust is handling the debiting from their bank account, converting it to Bitcoin, custodying that Bitcoin, sending the Bitcoin out to, when they initiate a withdrawal. None of those activities are actually happening on any system that, the wrapper controls. They're just more of a distribution model. And they work out a deal with Prime Trust for, how much to pay per user. There's some sort of pricing structure that's sort of like an enterprise contract. And what Prime Trust brings to the table is basically they're a regulated financial institution. They've done all the regulatory work, all the licensing, et cetera. So this startup founder doesn't have to raise millions of extra dollars to hire all the lawyers and do all the compliance stuff and build all the custody stuff that they would otherwise have to. They can just focus on building a nice app and focusing on their distribution model.
So they're basically brand marketing.
Effectively, yes. And now you can sort of get a little sort of funny with it, but effectively that's what it is. It's basically a crypto app as a service. Slap your own, brand onto it. And so there's all sorts of companies that built on Prime Trust. And by the way, I don't blame people for doing this, right? Like, there's a lot of apps where it just doesn't make economic sense to go get all this licensing. Like, if you're building an app, for example, where holding Bitcoin, your users would only ever have like $20 of Bitcoin at a time. It's like a rewards thing, right? But technically, you're still doing money transmission, so you need someone to handle this for you. Like, going and getting a bunch of licenses to build an app like that doesn't make any sense, right? So it does make sense sometimes to use these services. But what we saw was a lot of companies sort of just kind of slapped their front end on Prime Trust and sort of called it a day. Full spectrum of companies. I mean, I think even at one point Binance US was built on them.
Oh, right. Okay.
Yeah. So they had some big names. But what people didn't, and the reason that sort of Prime Trust didn't get the attention that other firms got was because they're a B2B2C company. So they're not directly serving any end users. So the vast majority of people would never know, to look into that, right? That they're not dealing with them at all. It's behind the scenes. And so it's kind of one of those things where, if you're in the know, you know.
And you agree to the terms without reading them, like we do with everything.
Exactly, yeah. You signed up for the app that built on Prime Trust. You said, oh, yeah, your Bitcoin will be a Prime. Okay, whatever, sounds good. I don't even know how to reason about that,
yeah,
right?
Let me buy some fucking Bitcoin.
Yeah, exactly. The consequence of this is the systemic risk that people don't realize existed, which is one custodian could have an issue and take down dozens of companies. And that's what just happened. Some companies sort of escaped in time, which is still kind of TBD depending on how sort of the bankruptcy estate thing plays out, right? But that was a systemic risk. So
what actually happened with Prime Trust? I mean, I know, but you're going to explain it better. Because at first when I heard about it, I assumed it would just been some, like most rugs / failures, they tend to be some misuse of funds, some kind of rehypothecation, or, we've had Machinsky arrested today, essentially gambling with funds and doing funky things with people's funds. To me, it sounded like it started with a very poor administrative error.
That is my understanding. I think so. So the short answer is they screwed up key management, right? And I think my background is software engineering and cryptography and computer security. I deeply understand how easy it is to mess stuff up when it comes to securing cryptographic material. The math of Bitcoin is not the same as the reality of actually doing it all with a computer, which is just a complex machine that sometimes messes up and has errors. And then you have humans on top of that have to make sure that it all keeps working properly. So the short answer is they messed up key management. The higher level sort of takeaway here is that, so they were actually in a category of companies. So they were a regulated trust company. So they had this sort of special status as a trust company, which is chartered by a state that allows them to kind of serve a higher grade of sort of financial and custody services for all sorts of things, dollars, Bitcoin, securities, all sorts of things. But the thing is, this whole sort of legal regime wasn't built for Bitcoin. It wasn't built for cryptocurrency. If you think about it, right, there was never really a type of property that a trust company had to was the fiduciary for, or had to sort of keep safe, that could just kind of go poof, right? Like it was securities, which was like legal ownership in a company. Like it's just like the definition of the law. You have this right to this cash flow. It's not like it just disappears someday, right? Or it's this piece of property, right, in a trust for a family. It's a ranch. Like the ranch isn't going anywhere. It's right there. Like someone can't just steal it, right? And so the legal structure was around sort of how they need to do accounting, how they need to do make sure they're not commingling assets and using the assets they're custodying. And so all the rules are basically around making sure they're not fraudsters. And they, as far as I know, sort of from at least at a very basic level, they didn't steal anyone's assets. What happened was, from it sounds like from the disclosures, they had a wallet. They had from my understanding, a hardware wallet that was originally used to custody customers' assets. And eventually there was some management change and some change in the company. And that wallet was discontinued to be used, was no longer used. But then something happened where some change was made to the system that re-enabled deposits to those addresses. It started distributing addresses to this old wallet to new customers to send assets to. And they didn't realize that wallet, they no longer had access to that wallet. So assets were being sent to a black hole.
So it wouldn't have, when you say there was a hardware wallet, it wouldn't be a single hardware wallet managing customer funds.
I don't know. I don't know. Like, I don't know these details, right?
It's funny because you do sometimes wonder what really, like, I personally have two multi-sig solutions. I use Unchained and I use Casa for separate things. And I'm pretty diligent about what I do. And I sometimes wonder if some of these companies are really just like maybe operating with one ledger that's locked in a safe somewhere. And it's like all their customer funds are on this one ledger.
Well, some are. And that's what I was getting at with my description of sort of this legal regime, which is a lot of people assume that like this is like a fiat credential, right?
Yeah.
Being a trust company. Nowhere in the process of getting that trust charter did anyone have to prove they knew anything about cryptography.
Yeah.
Right? And so you can end up with a bunch of guys that know how to run a bank with a trust charter, and they're now responsible for custodying Bitcoin, but they don't know how to do that. And so it's sort of like not like being a trust company is probably good enough to make sure your stocks and your real estate is safe in these like entities or something, right? But that will not tell you whether or not your Bitcoin's going to be safe, because just like you said, there's nothing preventing them from just having a ledger in a closet. Yeah, that's like sort of the nature of this. So these fiat sort of checklist things that protected traditional assets don't really apply well to Bitcoin.
And so as far as we know at the moment, that hardware wallet they retired, they just burnt the keys for.
I don't know exactly what happened. I mean, it could be that like they didn't keep a backup of the seed and someone burned through the pins on the device. Like, who knows? There's so many failure modes with key management that it could be a number of things, right? I can list all sorts of ways I actually did a poll recently on Twitter where I asked, if you have ever lost Bitcoin, how did you lose it? Did you lose access to the keys, or did you have it stolen? And like 10-1, it was lost access to the keys.
Oh, wow.
And this is like kind of where some of my opinions get a little heretical, but like you are way more likely to just lose access to your Bitcoin than to actually have your Bitcoin stolen.
I mean, I've been through a couple of near misses.
Yeah.
I had a Trezor that had like 3.5 Bitcoin on it at one point, and I didn't know where I'd written down the pin.
Yeah.
And I kind of knew what the pin was. Oh, look at that.
Yeah.
Yeah. Danny's just brought up the poll. So
it was more like
it's 3% keys
6-1,
compromised, 18.2% lost access. The rest is see the results. Yeah. That's mad. And I was going through the guesses. I kind of knew what number it was, but I didn't know the exact number. But the problem is every time you get it wrong, you have to wait a little bit longer. And, you get to the point where you have to wait days. I eventually got it. And so that was fine. And then there was another one recently whereby the seed that I'd stored wouldn't work to restore a device. And I was like fucking panicking. I had a different seed stored elsewhere. It was just things like that. And so I put my Jameson lot pad on. I was like, every 6 months, I need to run through and test everything. Now, look, I'm not too worried now. I'm in multi-sig in most solutions, but I've always had that separate wallet with like a small float on it.
Yeah.
Have you ever lost Bitcoin?
No, I don't think so. Touch wood.
Have you ever lost Bitcoin?
No, I've never lost Bitcoin, but I've lost like random alts back in the day.
Yeah.
Like, actually, but a lot of people lost Bitcoin early on because it wasn't worth anything.
Yeah.
So they didn't bother like remembering their password. It's like, I have $10 of Bitcoin on here in 2011.
There's a guy in the UK that every bull run comes up because he threw a hard drive away. Do you know about this guy?
Yes.
How much is that hard drive worth now?
I can't remember. He's always looking in skips for it.
Yeah, he's always looking at the skips. And so he actually tried to do a deal with the local council, and said, we want to excavate the tip. And he had a venture capital fund willing to invest in the cost of doing it, and they rejected it. But I'm sure it's like 170 million.
Yeah, it's a lot of money.
But the next one is, it get to a point where it's over $1 billion.
8,000 Bitcoin.
8,000 Bitcoin.
An interesting thought experiment that I've sort of I think is always funny is like if you've lost Bitcoin by losing access to your keys, if you had just had your seed words in your Google Drive, what is the likelihood you would have lost your Bitcoin, right? Probably much lower. I'm not saying
Don't do that.
you should do that.
This is not advice from Alex.
I'm not saying that's what you should do, but it's like an interesting thing to think about, right?
Yeah, but there's like lesser ones you can do. Like you can have a seed plate and leave it under your bed.
Yes.
Or-
I'm a seed plate fan.
Yeah.
I'm a seed plate fan. Yes.
Yeah, I'm a Casa fan in that you don't actually need, they're 3 or 5, you don't actually need to keep your seed. You can go seedless with that because, one's on your phone, they've got one, you've got 3 others, you can rotate them. I do keep one magically hidden away somewhere for one of them, but you can. I'm a little bit more worried on my seeds with my, say, 2 or 3, because it's a slightly different scenario. But yeah, look, there's a range of different things you can do.
Yeah. But one of these things happened, at Prime Trust.
Yeah.
And so yeah, doing it yourself, right? But then also at an institutional level, institutions at a whole nother level of complexity and this requirement for institutional permanence. Like with you, it's 1-to-1. It's always you. No matter what you do in your life, you're that guy responsible for that custody. Institutions aren't people. It's an entity. People come and go, right? And if you don't have the right sort of structures built into the institution to do key management properly, it's really easy to mess up. It's really easy for these things to happen. So,
well, how do you guys then worry about that? Do you partition that code and have to constantly retest if you've played with it or update things? And do you lose sleep over this? And
all good questions. So I don't lose sleep over it because we have built the company to do this and do it really well. It's sort of in the DNA of how we've built the company. We don't sort of ever get complacent, right? We're always thinking about how can we level up our custody, but sort of, I guess maybe in contrast to sort of the Prime Trust model, which we didn't go with as a startup. We decided we didn't want to outsource our custody and specifically our custody to somebody else because not your keys, not your coins. So we went through the hard work of getting all the licenses we needed to be able to hold people's Bitcoin and transmit it for them. And these are
from day one.
From day one. We didn't start in the United States. You have to do this in every different state. So there were actually a number of states where we didn't need one from day one. So we were able to launch in a number of states without these. And then we went state by state and got licenses. And that took about 2 years. And it's a lot of work. It's a lot of expense, has a lot of complexity, but it forces you to get mature really quick. And so because I knew that all that would, I couldn't sleep at night knowing that some guy at some other company could mess up and my business is over.
Yeah.
Right.
Which has happened multiple times in our industry.
Yes. And I'm just an adversarial thinker. I'm like, I can't, I need to build my company such that another company can't take me down. Right.
Yeah.
And I think about that constantly. I'm constantly running through scenarios. I'm constantly thinking about how can we build this, that adversary thinking into our planning processes at River and to how we all operate. Because it's non-trivial to think about, right? There's fiat, there's the banking system, there's software vendors, et cetera. But so we did things, the hard way, and because of that, we sleep better at night, and we have our own custody system, so we know that all the coins are there.
I guess you have to think about multiple attack vectors though, because there are bugs in the code that could cause an issue.
Yes.
There could be a erroneous developer who injects a bit of code. But you get around that with the work being checked, but then you could have collusion amongst developers to rug. That's a lot of scenarios to think about.
There's a lot. And by the way, those scenarios don't disappear if you build on a custodian as a service, right? If your app wrapper is just making API calls to the custodian to do things, right? You can still introduce vulnerabilities there. So like you can never actually escape this stuff. But for us, we have, I try to max complexity is the enemy.
Yeah.
Complexity is the root of all evil in this industry. And so
Big up Vitalik.
Yeah, exactly. And so I'm sort of like maximal complexity reduction. And so we've built the company like that. We only do Bitcoin, right? It's not obvious why that's a good business decision. It wasn't to most people when we started. It's becoming more obvious now, right? Because complexity doesn't just exist in your technical systems, there's legal, right? Dealing with multiple potential securities is a legal DOS I don't have to worry about right now. And most of my competitors do. Custodying Bitcoin, like we can just do native multi-sig, right? I don't need to worry about a much more complex multi-coin custody system that doesn't have some of those like protocol level guarantees for all of the assets that would custody. So, and then when it comes to custodying the Bitcoin, again, equally weighting the risks of theft and loss of access. That's what I think a lot of people miss. And so, for example, we have I have a few rules when we do our custody systems and designs that maybe are a little heretical in Bitcoin, but one is, we never send money to an address we haven't spent from. That is like, I will die on that hill. That is something that a lot of people disagree with me on. But that is the only way to know 100% that you have the key for the address that you're sending the Bitcoin to. And so when it comes to our big chunk of Bitcoin, single address. Because what if the BIP32 derivation had a bug, right? Did you run multiple versions of that library and compare the results? Did a cosmic ray hit a transistor while that computation was happening?
A what?
A cosmic ray. Like lots of people don't think about these things. Like computers are machines. Machines have issues, right? One of the failure modes that a lot of people don't realize, and it's very rare, but when you're dealing with big amounts of money, very rare matters.
Yeah.
And so, and this is something that I saw Greg Maxwell talking about at a meetup once, which is you could run a program in your computer, and a cosmic ray, a cosmic ray, like an electromagnetic sort of like an X-ray or gamma ray, can hit a transistor and cause it to flip from a 0 to a 1. If that happens at the right time, that can cause a sort of an error. That can cause an error in a result.
How do you protect against that?
You run it twice, but the way to really protect against it is to make sure that you're the result you want is completed end to end. You have to come up with a way to prove that the result is correct. And so in Bitcoin, if you derive an address, and there's checksums on the address that can protect against certain things there, but there are parts of the computation where the checksum won't help you. But if you can sign for the address, right? If you can spend from the address, you now know with 100% certainty you have that key. And so these are all these little niche things, right? That custody is hard. And so just this is why things like this are the reason I keep it very, very simple.
One of the things I've never understood about exchanges, you might not be able to answer this because it might be a security thing, but I'm assuming you operate with hot and cold wallets.
Yes.
And when you need to deposit from the cold wallet into the hot wallet, like when I'm sending, say, some Bitcoin to Danny, he gives me an address. I paste it in, and then I check in the first 4, and then I'm checking the last 4, and I'm sending. And by the way, I have sent hundreds, if not thousands, of Bitcoin transactions, and copy and paste has worked every single time without fail. But I always check. Is it the same in a big exchange? Are you copy and pasting addresses and check it, or is there like different systems you use when you're at that level?
You have no, you have different systems.
Okay.
I can give you some insight in how the sausage is made here. So, you have cold, you have hot, and then you have counterparties as well that you're moving Bitcoin with, like OTC desks and stuff that you're trading with. You have systems in place such that there are controls, often at an application level, to where people can send Bitcoin, right? So, for example, like the way a lot of people operate is Bitcoin can only move from cold to this one address, right? And that's like a hot, or like more of like maybe a warm or like a staging wallet. And then there's like some, application controls. Then to move it from there, 3 people out of this group need to sign off on, that transaction. And then, you have like whitelisted addresses, like this is OTC desk 1, this is OTC desk 2. And so you can sort of relax some of the approval controls there because like the worst case is like it gets sent to like another regulated financial institution, right? And then the real sort of like danger, right, is the proper hot wallet, where like Bitcoin could get sent to like any address that your users are withdrawing to, and there, you do things like you have rate limits, right? And so like and you only keep a certain amount there, so you like move funds from like the staging wallet to like the hot wallet to keep it topped up, and if you hit a certain rate limit, you have people start to like manually approve things and take a look and make sure everything's still okay. So you have lots of these controls.
And are these controls you've built up yourself, or are these industry standards that people have adopted?
I don't think there's just like one standard. I think that's very heterogeneous. I think a lot of people end up converging on something like this.
Right. Okay.
I think just before we move on to River, we should go back to Prime Trust just for a minute, because I feel like we're giving them an easy pass.
I'm not done on Prime Trust. Don't worry. I'm definitely coming back to Prime Trust. Okay. That's a good point to go back to Prime Trust. Do we know how much Bitcoin they lost?
I don't think we know how much Bitcoin they lost. I think we know they lost, I think, was it 80 million in assets?
Do we know what they had under management?
I don't know. I also don't know what the breakdown of the assets were. My understanding is it might not be that much there might not have been that much Bitcoin in there. I don't know for sure.
What I'd heard is that they have almost all the Bitcoin. In fact, I think they have more Bitcoin than they needed to, but they've lost a lot of the like fiat tether value.
Oh, okay.
That they're meant to be holding.
Interesting.
I'll try and pull up some numbers.
Interesting.
But so, and getting back to that, so they'd lost obviously a lot of Bitcoin, and then I believe they used customer funds, like the customer tether value, to buy Bitcoin, which is potentially fraud.
Yeah.
That's where they potentially, okay.
So then that gets interesting. So, if they use another customer's funds to buy Bitcoin, and then people withdrew the Bitcoin from Prime Trust, will a judge say that
needs to be clawed
there's
back?
clawbacks? Or like, I don't know how this goes down. It'll be really dependent on how the judge handles things.
Well, it always tends to take a lot of time, and a lot of money gets swallowed up by lawyers. Time can be a killer of a business as well if you need those assets. I don't know which companies have been affected, but I do remember the rumors coming out and companies saying they've got out. But I mean, it's catastrophic for some companies to do this, or individuals have to cover the funds.
Yeah. And getting out is like, I think what we're seeing with like FTX and Celsius and these others is like, well, you don't really know you're out until the judge says, there's no clawbacks, right? Like,
yeah.
So that could be like multiple years. I mean, they have everyone's KYC information, so they know they know who got the Bitcoin out. When now again, I have no indication that this would happen. Like it's I don't know. It's like a nuance of bankruptcy law. Like there's not real precedent for this kind of thing. So we'll see.
Are Pro and Trust done?
It's yet to be seen, I think. So Nevada was like the last place they had a license, and they've revoked the license, so they can't trade at the moment.
I wouldn't have thought anyone would trust them anyway.
Yeah.
Just change their name to Prime.
Well, yeah. Now there's this sort of the founder of Prime Trust started another company called Fortress Trust, and so it's kind of the same playbook, but I think this time they probably don't mess up the key management.
So in some ways, well, not in some ways, what you've done with River is you've taken a low time preference in terms of building the business to build it right,
Yes.
to structure it right, to protect your business. The cost of that is the cost of doing business,
Yes.
scaling, speed. You've almost taken that Saylor approach where he talks about building things for decades
Yes.
rather than quickly, because there's so much inherent risk.
Yes.
What have been the kind of pros and cons for you for that?
The cons have been dealing with, the pros have been sleeping at night, right? Or at least just dealing with a different type of problem than worrying about my custodian. The cons have just been like all the extra overhead that comes with that. There's pros to that. I mean, it does force you to just mature very quickly as an org, right? If you're getting licensed in all these states, like you can't operate just like a normal startup. You have to get professional really fast, right? Like from day one, we've had full financial audits every single year. It's painful. Like if I don't know who's like, some people listening who have been through a financial audit understands like how painful it is. But it forces us to have our act together, right? And it forces us to have our systems, our accounting, our books, like tight to the T, like very early, all these controls, all this stuff that would be like only a big company would have. You'd kind of just have to get in place early on. So the downside is having to do all of that, but the upside is like, well, we need to be doing that anyways. So it's expensive. It slows things down. Like and I think people say that a lot. Here's like a tangible example of how like the complexity it adds. Somebody's like, you know what? Like, I want this service of yours, but I want to pay you in Bitcoin, right? Well, we're a Bitcoin company. We should be able to accept payment in Bitcoin. Well, like a typical startup could like just easily, just like send us Bitcoin. You're good. No, we need to make sure that financial transaction, we know how to classify that in a GAAP accounting way, and it's like properly documented, like that the Bitcoin was accepted, and like when it was converted, and how are we recognizing this revenue? What if the Bitcoin price changes? How do we explain to auditors sort of like the nature of this transaction and like this entry on the GL? There's just like all this downstream complexity you have to worry about this like single event like creating, right? And that could lead to 20 to 40 hours of work for people, right? Just dealing this one exception to things, this one new thing. And that's like just a little example about sort of the type of complexity and expense this stuff adds to businesses.
There's a tax implication on that as well. I was talking to Danny about this the other day. I don't know if it's the same in the US, but our turnover and profit, any Bitcoin we receive, that is priced as in pounds at the day we receive it. If the Bitcoin we hold drops in value, that doesn't change our turnover. Mm-hmm. So say we were only paid in Bitcoin and we received £1 million in Bitcoin. On our books, in our P&L, that says we received £1 million. Mm-hmm. Not £1 million of Bitcoin,
yes.
£1 million. If the price of Bitcoin drops 50%, that entry still says £1 million. And so if, say, we made £500,000 profit, we would have to pay tax on £500,000 profit, even though the Bitcoin we hold is worth less than that. Mm-hmm. Now, we get a credit on capital gains the following year if the Bitcoin goes up in value, but there can be a tax implication. Now, I wasn't aware of this at the time. I didn't think we were receiving £1 million. I thought we were receiving Bitcoin, and at the end of the year, we value that, and pay tax on that. That's not true. So it's just being a Bitcoin only business is actually very difficult with volatility.
Yes.
So we have to now, whether it's the football club or whether it's the podcast, we have to consider that risk. And it's annoying because like sometimes you get paid in Bitcoin, you want to hold it. Like the football club, the Bitcoin it held from when we launched it is down in value. You're still going to pay tax on that.
Yep. And add a gap financial audit on top of that, where you have to deal with a third-party audit firm who's putting their reputation on the line to sign off on your books. And that whole world is fiat. Everything is in dollars. They don't care that you have Bitcoin, that you think in Bitcoin. They don't care. Like that doesn't matter. The law doesn't care about that, right? Like the dollar numbers have to be right. And so, but I wouldn't do it any other way.
Of course. With that though, you've built a very robust business, right?
Yes. Yes.
I know it's your firm, but the way I look at River, I consider you the strongest Bitcoin on-ramp, the most well-established long-term Bitcoin company. And I'm not just saying that because you're here. We've had these conversations. That's how I look at River. But then I also, just to be fair, I look at River and go, I don't hear a lot from River. You're not out there marketing all the time. And I think that potentially is because you have been doing that hard work. Has that been a tough thing to explain to investors?
Not really. Well, because we've actually had great growth. I mean, the last 4 months we've hit all-time high record monthly transacting users month to month. But that said, we probably haven't, the lack of marketing was, I would say was predominantly because of who I am, right? I'm an engineer. I'm a builder. Like the first phase of River was it was my team building it. And then also, honestly, just learning how to run a company. And, this is my first startup, getting smart as a founder and a CEO. And we had nice organic growth in the beginning. So marketing wasn't this thing like we were sort of desperately in need of. But one of my biggest learnings as a founder was, and one of my biggest weaknesses early on was just I'm not a marketer. I didn't know how to market something. And so that's something I had to get smart about. We've since built a really strong marketing team in the last year, and it's been paying dividends. And so you're going to see that change more and more.
But it felt like you were doing the hard work up front to build the right company first.
Yes.
No shit coins.
Yes.
Bitcoin focused, no stupid products. Now everything I understand about how you've built the back end in terms of, you controlling the stack rather than outsourcing it. It sounds like you've built for the long term.
Yes. This company is being built like, we're building a cathedral, brick by brick. And so, we didn't feel this need to yell it from the rooftops early on. Like we needed to figure things out, right? We had a lot we had to do to get it all right. And we're just now getting to the point where we're like, you know what, we can ramp this up. And it took us 4.5 years to get there.
You've had FTX marketing for you.
Exactly. We had a lot of these guys marketing for us. I mean, it's kind of funny, like our ranking in the market has gone up because basically a lot of top guys just blew up. And so, yeah.
Yeah. I've also noticed you've expanded your services a lot. You've offered the mining, which surprised me at first. I was like, wow, where's this come from? But you offer the professional services. What do you
Lightning
call it?
payments?
The
private client.
Private client. You offer that service. You offer the business services. I've seen all that coming and been part of it, but you haven't gone into the loans market.
No, we never will.
Oh, you never will. Not even in a way like Unchained have done it, where
No.
okay.
I don't like lending.
Okay.
I don't like to be absolute. I don't like to say never because life changes, markets change. There's opportunities that come up. I learn new things. I learn there's opportunities that are within our risk tolerances. I have a hard rule. We only build things that allow us to sleep at night. I don't like lending. I just fundamentally don't like it. It just doesn't make me feel good. It feels weird. Feels like leverage. It adds a bunch of risk. It's it opens us up to all these fiat things that we're not. We're not a finance company at our core. We're builders. We're engineers. We're product people. River is going to our growth and our expansion and our product suite is going to be focused on building really, really good software.
Okay.
Not building really good financial kind of financialized sorts of things.
In terms of self-custody, again, you might not be able to tell me this, but I'd be interested to know, as a company that pushes self-custody and is a big advocate of self-custody, what percentage of people actually still do it?
I'd say it's growing. So we just launched the auto withdraw feature to try and get more people to self-custody. So one of our popular features is we have zero fee dollar cost averaging. So we do DCA for free, and then you can auto withdraw those Bitcoin. And that's like I describe that as our Costco hot dog, right? We don't make any money on it, but it gets people in the door, and maybe they do like one-time buys, and we cross-sell them things over time. But I'd say it's about 20 to 25% self-custody. So the vast majority don't. And the reason is the vast majority of people kind of know that someone else, that like we can probably do it better than they can. It's not that they can't do it well. It's just that it's economic specialization of, expertise, right? They want to outsource that trust to a firm that specializes in it. And I don't blame them for that. It's a lot of work to get it right yourself. And the thing is, like, we have no incentive to hold on to people's Bitcoin. Like, we don't get paid for it.
Yeah.
It's a free service we offer. So if somebody withdraws their Bitcoin, it's great for us.
Please withdraw all
Please
your
withdraw.
Bitcoin.
Like, I don't want to hold your Bitcoin.
Yeah.
We do it because if we didn't, people wouldn't use our service.
Yeah. Yeah. That auto withdraw, that DCA, say if somebody is doing $25 a week or something, that's a lot of UTXOs for that person to be putting into cold storage. I saw Marty Bent tweet about this week. He's talking about fat UTXOs in cold storage. Do you think about that at all? Because I hadn't considered that until I saw Marty's tweet. And I was like, that's a great point.
Yeah, we actually thought about that in the design of this product. So the way it works isn't your DCA hits and then you withdraw that amount. The auto withdraw is sort of a separate thing in your account, and you set a minimum threshold that you want the auto withdraw to trigger. So we encourage people to set that to something sort of higher, so that they're not getting all these small UTXOs.
Yeah, good. So in terms of what's coming up then for River, because you've done all this work now, a lot of your competitors have gotten fucked.
Yeah.
So what's now? What's going to come?
Yeah, so there's really two sides to how we think about building. There's the excuse my French, like not fucking up side, which is work, right? So we have specific projects that are keep everything safe, keep making it safer, like keep reducing the risks of anything bad happening. That's like a lot of work just for that, right? Just to contain entropy, right, at a business. And then on the sort of new things side, there's 3 verticals that we're going to be operating in over the years to come. And we're just going to be building in these verticals. It's serving consumers, the personal side, serving businesses. And I want to see SMBs and other like operating companies using Bitcoin more and more, and then payments infrastructure. So our Lightning and Bitcoin infrastructure as a service business. And those are the 3 verticals that we're going to be building in, with the vision of accelerating Bitcoin's adoption as a store of value and a medium of exchange through these best-in-class software products.
Talk to me about the Lightning business services.
So that vertical came about sort of in an interesting way. So when we launched River, because we were Bitcoin only, we were like, well, you know what? We have the time to like ship Lightning Network support in 2019 when we launched River. And so we were the first Bitcoin exchange in the United States to have Lightning Network support. So since then, we had built up this Lightning Network infrastructure that started getting pretty big and beefy and high quality. And eventually, we started seeing an opportunity to sell this as a separate service offering. And sort of the need we saw was more and more apps wanted to add Lightning Network support to their custodial wallets, but they didn't want to build all this stuff themselves. Mm-hmm. So we were like, well, we should just build an API for this. And so we did. And since then, we've onboarded some really cool customers. Some we haven't announced yet that hopefully we can announce soon, which I think will be pretty exciting. And but some we have announced. So for example, like we're the Lightning Network backend for Chivo, for El Salvador's wallet. And so our focus right now is going to all these custodial wallets and exchanges all over the world and saying, look, I know Lightning isn't huge right now. Like I know, adding another token will make you more money, but like this is a plug and play solution, right? And it's actually sort of, we're seeing a lot of adoption here because what's happening is as the market's kind of gone flat and sort of the long tail of asset trading volumes have dried up, these regional crypto exchanges are going, well, we actually want to be like real financial institute. Like we want to process real economic transactions for our customers. We want to improve our wallet services. We want people like transacting through us. So now they're going, you know what, like Lightning could be huge here, right? And we're seeing more and more people want to get involved in remittance flows. There's an interesting sort of macro dynamic, which is all of these regional crypto exchanges have built best-in-class fiat delivery to their like regions, and they have crypto bridges, right? And so there's like, so I see Lightning as like connecting, like as being sort of like the final sort of like ultimate connector of all these exchanges that have been built all over the world. And so now value can seamlessly transition between all of these companies instantly. And I think that'll unlock a lot of interesting use cases. So we're basically coming in saying, to exchanges in Europe and Asia and South America and be like, you want to add Lightning? Plug and play. This is easy to use as Stripe, and it just works.
What do you think about the state of where we're at with Lightning? We're in Nashville for the Lightning conference at Bitcoin Park. There were some criticisms pointed at Lightning Network after all the ordinal bullshit. Like it exposed, we had Matt Corallo on, he said it exposed some weaknesses in Lightning. Then we've seen other layer twos. Arc has been come on the radar recently. You're a techie, I'm not a techie. Where are we at in terms of Lightning and other L2s? And where are you thinking with regards to these?
Yeah, so the way I think about Bitcoin is there will always be innovation, especially above the base layer, right? I love all the L2 innovation happening, and I will invest in that at River in our business as we see progress there. But Lightning today is by far and away like the mature and developed L2. You cannot compare an idea someone wrote down in a blog post to a production, like a protocol running in production that's been hardened over years, right? The devil is always in the details when you go to implement these things and build them at scale. Arc is a really cool idea. But to compare it to Lightning is like comparing a theoretical new internet protocol to TCP IP, right? It's like, it works better on paper, but like, it's not real. So like there's a real world like stickiness to protocols, and Lightning has that. So is Lightning perfect? Absolutely not. The worst thing about Lightning, and the thing that no one's really figured out how to truly get around, is this whole like channel capacity challenge and problem, the liquidity problem. It doesn't feel like you should have to do that, but you do today. And there's ways to like smooth it out and optimize it, but it's not perfect. But you can't strive for perfect. You have to go one step at a time. And I think Lightning has a long life ahead of it.
All right. Well, listen, I think what you built is brilliant. I was just remembering that. I think we met before you launched at a dinner. So. There was a dinner in San Francisco.
That's right.
There's about 20 of us. I'm pretty sure that's the first time we met. I think Liz Starks was there.
Yeah. She's a good friend. Yes.
Was she an advisor?
Yes.
Each an advisor? Yeah. I remember that dinner now.
It was instrumental in River. She's given me some of the best business advice I've ever gotten in my life.
Yeah, she's amazing. I think that's where we first met, and it's been great to see you build this business up. Where do you want to send people?
Can I throw a question quickly before we get there? So I just thought I was speaking to someone at Bitcoin Park the day before yesterday, and he was explaining how in like traditional finance world, there's a sort of separation between brokerage and custodianship. And like the broker's not allowed to custody assets I don't know if it's in every circumstance. Do you think, and he was worried that that's going to, or not necessarily worried, but he was thinking that may come to Bitcoin. Do you think that's likely?
It's unclear. I mean, there's a lot of nuance in the law. A lot of those rules are for securities.
Right.
So it's possible that comes to secure, like if these tokens are classified as securities, it applies to that, but not Bitcoin. It's really, it's not a legal, like that sort of like rule set is built for like financial institutions that are offering like lots of assets to be traded to make sure they're not also trading with their customers' funds, right? So then like the like rules like that make sense for a certain class of firms. Like for example, you don't want Fidelity to be able to like sell you Apple shares and then like those Apple shares are in your account, but they're also like trading those Apple shares and market making with them, right? Like you want like that to be separated. With Bitcoin, it's kind of different because you just take it out whenever you want, right? Like you can prove to your customers like the assets are there. So I don't know like what sort of the legislators or the regulators will decide on what needs to happen. I think it's really overkill for Bitcoin brokerage. But if those rules do apply, we can handle that because we have sort of the legal expertise to spin up sort of like a, like qualified custody sort of entity. That
just a new entity,
can
that's just the
segregate
custody.
it.
Yeah.
My concern about sort of a rule like this happening is innovation for custodial like Bitcoin will just stall out, right? Because like a lot of these qualified custodians, their job is to be like checklist legal guardians. So they're not thinking, well, how do we add Lightning, right? If you think about it, if your Bitcoin has to be custodied here, that means the wallet functionality that you have, it needs to be completely powered by whatever that custodian offers, right? So this could substantially hinder Bitcoin becoming used as a medium of exchange, for example. You could only have like first class sort of medium of exchange wallet tooling if it's self-custodied, which I think would just drastically sort of stall its use as that in the United States. And so that's my concern is sort of like these qualified custodians are just slow moving. They're there to just park an asset, not actually use it.
BlackRock.
Yeah. BlackRock. Yeah. I mean, the ETF stuff is interesting.
Well, look, I'm coming around to the idea that this is a huge advertising campaign for Bitcoin. And look, if they end up locking up 1 million and a bunch of people just aren't holding the asset, fine, as long as it does the job of giving us protection, advertising to everyone that Bitcoin's okay. It gets the poor journalism off our back. And we were with Alex Storms before you, and he said this is what hyper Bitcoinization looks like.
Yeah.
So I'm fucking all in. Pump our bags, Larry.
Yeah, it's true. I mean, I don't think it can make the Bitcoin price go down.
Yeah, that's for sure.
Yeah. So go for it.
Well, listen, look, we're going to head over to Bitcoin Park with you shortly. But look, congrats on this. It's brilliant. It's like seeing you build this business and you're still around while others aren't and you're still growing. It's amazing. Congratulations. And I can't believe it's taken this long to do this.
Yeah. Thanks for having me on.
Anytime, man.
It was a pleasure.